The Amazon story is so interesting right now because everyone's been so down and out on the fact that they've been losing market share to Microsoft and Google on the AI build out. Amazon has come out and told us, hey, we have excess demand. We just can't fill it right now. They're not moving quick enough to bring on new compute. And if you research the Amazon story, you'll see that they have been through a massive build project this year, and it looks like they are finally about to bring on a few new massive data centers here in the next few weeks to few months based on satellite imagery of these centers and how close they're getting to becoming operational. Now, the really interesting tidbit there is that Amazon has spent so much time and money on their proprietary compute. What's it called? Trillium compute. That compute has essentially been designed as a vertically integrated solution for one client, Anthropic. And I think that same report had some charts about it, or maybe it was a different report about Anthropic now actually getting the vast majority of API business coming out of this kind of AI growth story. Anthropic is essentially set to take on all of that capacity from Amazon as part of the Amazon deal that they structured in 2023 and 2024, where I think Amazon spent $6 or $7 billion to invest in Anthropic, and that was part of their deal. Now, before that deal, there was a deal that Anthropic had with Google that set up Google really well with Anthropic. I think that was back in 2022. So the storyline here is that everyone is looking for Amazon to reaccelerate AWS growth. I think they were at 17 or 17.5% growth last quarter, which was down. So if we see any signal either in the current quarter or any type of strong signal with forecast for the market to believe that they are indeed reaccelerating growth, that would be the big move for Amazon. That's what investors want to see. And supposedly, these new data centers that are coming online, along with the confidence in that key client and Anthropic, would theoretically push the growth rate above 20% by early to mid 2026. So that's the bull thesis on Amazon. So I like the risk reward on Amazon. Amazon's one of my biggest plays, guys. I like the story. I like the risk reward.
You've doubled down on Amazon because I know you're a longtime holder of Amazon stock like I am, and we're just kind of so deep in it that it's hard to sell because you don't want to pay taxes and you like their long-term story and all of the reasons you're just going to buy and hold Amazon. But you're playing Amazon for earnings.
Yeah, I am. And the risk factor, of course, is that the layoffs being a negative sign that something behind the scenes is not great at Amazon. There's a lot of speculation about that. That could be true, and we'll find out, right? But I don't think that's an issue. I actually don't even think that the 30,000 layoffs had all that much to do about AI either. I just think, like I said, it's just Amazon reallocating resources and capital from an area that's more speculative to an area that's a known. Okay. So I'm not concerned with the thing that everyone else is concerned about, but it is a risk, right?
It's a risk, but it also just kind of, like you say, it signals that they're shuffling things. That to me, in a company like Amazon, only means they're trying to drive more efficiency. They're just trying to tighten things up. When you have 130,000 corporate employees, losing 30,000 of them isn't that much, right?
It's still a lot, Dave. It's a lot. But again, it is a risk, and maybe we are wrong.
They did specifically mention when they announced the layoffs, they mentioned specifically, and they're one of the first companies to actually pin it on AI. AI has given them the opportunity to, even if it's not fully AI, and they did mention a bunch of reasons that they're having layoffs, but really gives them a chance to reorganize and restructure and get rid of things that are losing projects.
Well, yeah, it's about AI. It's about the fact that they want to spend more money on AI compute. That's what it's about. So it is AI. They didn't lie, right?
Yeah,
So,
and they're doing these extra million Trinium chips by the end of the year for Anthropic. There's a good use of money. They know that has an ROI.
I want
Having
to ask.
someone fill a cubicle may not have any ROI at all.
Oh, Jordan, I want to give you an opportunity to chime in here, but also on the Trinium chipsets, it's interesting because everyone likes to rip on them as not being as good as NVIDIA. Obviously, I think they perform like 3 times worse than NVIDIA, but if you look at the total cost of ownership, the way that Amazon deploys the Trillium chips inside of their data centers, because they have a lot more control over the infrastructure for how those chips are set up. Supposedly, once you work in the total cost of ownership, the cost per performance isn't that far off. And also, those chipsets, like I said, have been designed to be optimized for the type of compute that Anthropic needs with their models, which I guess are more leaning towards the memory side of things. So they are custom designed, essentially custom designed for Anthropic. So it's an interesting story that I don't think most people fully grasp. And if you believe that Anthropic is going to be a primary leader in this sector, and certainly it looks like they are, they continue to raise massive amounts of money. They continue to look really healthy, and they will have the ability to continue to raise capital. Amazon is looking to be a primary beneficiary of Anthropic. So we're going to talk about Microsoft in a bit and OpenAI, which is multiple old episodes, right? That one worked out. In a way, Amazon might be the way to play Anthropic on the AI side now. It just took a while for them to get there with the data center capacity to serve that relationship.
We've been talking about how, your favorite ChatGPT is the normie of all LLMs, and that people that are doing serious work are doing it on different models. For a while, that was Gemini, but I hear more and more people seeing praises for Claude. So, maybe some people are dumping Gemini for Claude. And I think we've seen that. There's rumors that their ARR has grown like 7x in the past year or something like that. So I do think people are converting and starting to utilize Claude more and more. We've experimented with it, and it's very precise. And so you get a lot more precision and a lot more insight into what's going on underneath the hood when you use Claude than you do some of the other tools. So yeah, I do think that perhaps this is a way to play Anthropic and the use of Claude by businesses.
Two other things on Amazon. We obviously have the longer tailwind story on Amazon, which will be supportive on its pricing going forward, which is just the automation and robotics story, going forward, and how that will radically shift the margins at Amazon over the next 20 years. So that is a massive, massive tailwind, right? So if we can just get over this AWS market share issue that's been pressuring the stock for the past, year and a half, that would be monumental here. And that's why I love the risk reward on Amazon. The ceiling is so high. If and when we could just get over that whole deceleration of AWS market share. And I think there's a reasonable chance that happens this quarter or the next quarter. Enough so that I want to be here and levered in Amazon.